Hello, everybody. Welcome to Monday Night Live. Tonight, we have the financial guru, Justin Urquhart-Stewart, on. A great friend of mine. We worked together in Barclays. We studied the stock market. We drank quite a few bottles of red wine when you were allowed to drink at lunchtime, Justin, and we're not allowed to drink at lunchtime suddenly when the Americans took over our bank in Barclays. So great to have you on. Let me tell you just a little bit about Justin. When he left Barclays, he set up Seven Investment Management, which was to cut charges on investments, because that takes up a lot of your cash, and particularly with money reinvested. Justin left Seven and now is a financial commentator in great demand, been on the BBC today. Justin, welcome to Monday Night Live. Thanks very much indeed for coming back and joining us. Let's not mess around, beat around the bush. Liz Truss was the Prime Minister when you last came on. I think you were quite scathing about her economic policies, and she got sacked 7 days later. Was that your...
Well, it's certainly, people quite rightly look at it saying, was she wrong in what she was saying? And but where she was wrong was going about it the wrong way, merely by trying to say, I'm going to have tax cuts and to give more money back to people who benefit most, the wealthiest. We know from history, actually, they sit on it. They don't necessarily go out and invest it or spend it. So it's an inefficient way of doing it. So it's not that. What you needed to focus on much more in terms of where are the incentives? EIS scheme, or maybe our EIS as a regional EIS, getting more. There's no shortage of capital in this country. It's just we don't have any mechanism to get it from the private individual to those businesses. And we had AIM, of course. I know we've talked about that before, but the LSE now, I think they run it into the ground is probably the best way of describing it. And they want to get rid of it. You want smaller businesses to have the capital to grow. And private equity can't do it. And sometimes you don't want them anywhere nearby half the time. So I just find it really very frustrating. So we've got to do a lot more education.
So the FTSE is at an all-time high. I read on Friday, I think. Was it Friday? It was what's actually going on with investments? What's going on in the world now? Certainly every newspaper, every news broadcast I read, look at, says the end of the world is nigh, everything is doom and gloom, and nothing's going to ever get better in Britain. What's your take on it? Because
Well, I love it. You saw those pictures of those people standing around looking rather glum with a large clock at 2 minutes to midnight or where it was. And so therefore, what can we do about it? Well, I basically all jump off a cliff. It was just frankly irresponsible. And particularly at a time like this where people are frightened, because the geopolitical issues. So there we have an idiot like Putin, and what would it take for him to go a stage further? And actually, we end up with a far larger conflagration. So that does frighten people, and that's the key word to any economy, and that is confidence. If you've got confidence, then you and I will go out and buy stuff. I'll go and invest in stuff. Companies will invest further, and we can get external people coming in. Now that's good. Build that confidence. The problem we've got is we start up more businesses in this country than France and Germany put together. We're good at starting them up. Where we're really rubbish at is growing them. Because what happens is that they've got some, particularly in terms of the high-tech stuff, around the sort of tech hubs around Britain. What you'll find is Americans coming in quite rightly saying, great, that's got a talent there. We'll just go and take that IP off and just put that back to Silicon Valley. So when they were doing a review last year of questions, how come not so many British companies come to the stock market? Because they can't get that far. They've already gone. So this is where, again, where we need to actually go through another form of big bang to try and change all of this, to actually open it much more from the old cobwebs that we've been dealing with. So I think people are right to be concerned with what's going on, because we've never lived through this before. The bit that you and I remember, of course, is higher inflation and how damaging that can be. But to an awful lot of people, it doesn't really mean very much, except for the fact that they'll equate that to what's happened to their gas bill and things. Well, obviously others is affecting it, but adds that general malaise. People saying, if we're not doomed, it's going to be pretty rough. Actually, at this moment, people must pay attention, because what you're going to be seeing, we see the FTSE go roaring ahead because it got left behind. Why? Because it wasn't very sexy. We don't have any tech stocks on there. And so we've got some really rather indifferent looking ones, but good old sleepy businesses which make a profit, pay a dividend, and on a regular basis. I mean, a company who took over Seven Investment Management, I was trying to find one which actually had a longer term view and a similar ethic to ourselves. And it was fascinating. We really couldn't find them. I ended up actually doing a deal with the lowest bid, not the highest bid, because they were the only people that actually came anywhere near that level of that sort of criteria. And it was Caledonia, the investment trust, which is the old Kaiser shipping company. And it's the Kaiser family up in Dundee. And late 50s, early 60s, got out of shipping. What are we going to do for the family? And so didn't actually set it up, but it basically took over Caledonia Investment Trust. Now, what interested me was two things. One, their average investment period, unless it goes wrong, is between 11 and 15 years, whereas private equity is 3 years. And they'll say, no, you're going to 5. That's only because you cocked it up. And I find that fascinating that has happened. So you take that and the issue of confidence, and it's frustrating.
So
sometimes going to say I've forgotten.
Well, let's go to interest rates, because they were 0.5% last time you were on in September. They're now 4%. I couldn't really see why they went up from 3.5 to 4 last week. That may be my ignorance. I don't know, but people can't afford anything. They can't afford electricity. How putting their mortgage rates up is going to help inflation? I don't get it.
No, you're quite right. And it's because you're in a strange position where traditionally you'd say inflation's high, you put up interest rates. But of course, actually, we've got a weak economy, so you want the economy to grow faster, so you give it more incentive to do so. But no, we can't do that because the money's going elsewhere. And that's why this issue of just giving tax money back to clients is hugely inefficient. So actually what governments really should be doing is just making sure that the structures are there to enable people to do business and investments and build up value in a controlled, regulated environment, which is still dynamic, still inventing things, but actually making sure that it's doing practical things in business. So one of the key elements I'd actually always said to the government is, look, you've got lots of local pension fund money. How much of that, I had this conversation with a chap in Newcastle about it, who does the Newcastle Council pension funds. How much of that actually comes back to the Northeast? And he shrugged his shoulders. He said, well, I've no idea. I said, well, what do you mean? He said, well, we get our the wealth manager down in London sends me a quarterly or 6 monthly report. That's fine. But most of it's into strange funds he's never heard of in the first place. I said, but actually, not by being charitable, you can actually make sure that money goes regionally, back into those areas. That's where it is. And the big lie here, we've got lies too dramatic, but the big issue here is everything is focused on London and the Southeast, and the rest of the country is like an old Western film with some old weed blowing down the high street. Actually, of course, you go to the key areas of those universities, particularly the ones with spinning out more tech businesses. And I know tech, suddenly the bubble has burst on that time being. That doesn't mean it goes away, just that those companies have to be significantly revalued. But back to the main point here, which is there are lots of these companies coming through, but they need to get capital to go to the next stage. And where do you identify them? Well, all these different hubs you've got in terms of Silicon Valley. You obviously have Silicon Glen, Silicon Fen, Gorge, that's Bristol. And I think you get silicon implants as well, but that's a different subject altogether. And what you'll find is you go to those universities and they've got their more entrepreneurial way of trying to do things, but they're not professionals in terms of finance. They really don't know. What we can do is make sure we give the expertise there to actually take those businesses out and be able to grow to the next stage before they get scooped up by some American firm or a private equity firm.
So do you think 4% interest rates are going to help get inflation down? I thought that was the old model. Well,
and this is the dichotomy of what you've got is, there we had Liz Truss saying, right, well, cut taxes and go for growth. Which is all very good. No one says that's not a bad idea. But the trouble is that in itself is potentially going to be inflationary. Meanwhile, the Bank of England is doing diametrically the opposite and saying we're putting our interest rates up, but we've got to be careful because it'll slow the economy. We must get inflation done. And so you have these two sides, and it really is sort of lack of, not so much Bank of England has its issues, but I have to say Truss was frankly looking stupid coming up with some of those sort of statements without realizing what impact it has on the markets. And what happened, therefore, to interest rates and to a huge number of people, therefore, the amount they're having to pay more for their mortgages. But there is one issue that the Bank of England's got in the back of its brain. We were on emergency interest rates for 10 years. That's not sustainable. And so you need to get the rates up. So when it does slow down, I've actually got some ammo to use to be able to try and encourage the economy going. So you always get back to interest rates at their norm, where they sort of roughly should be, which is sort of between 3.5% and 4.5%, something like that for Britain. But of course, that doesn't help. Then when you've got that potential prime minister actually driving it the other way. So that was actually very difficult. I think the bit that really annoyed me about Truss was actually it made us look stupid. I don't mean just me, I achieve that every day. But actually, as a country, our international reputation was being sullied by people looking at it saying, it doesn't work, it doesn't add up, this. And I know the Office of Budget Responsibility, or OBR, everyone criticises because their figures are wrong. Yeah, well, nearly all ideas of what markets are going to be like in a few years' time are normally wrong. But the concept of what the OBR is there to do is to sense check what's happening. And because you bypass them, and you say we don't need them, what does that say to the investors? Hang on a second. You give me an idea of investments, that's a good idea. But how are you going to pay for that? You're not telling me that. Okay. Meanwhile, actually, we've got this issue with banking and putting rates up. It doesn't seem to be working. So good investors will take a step back and say, I'm sorry, Britain, I'm not going to be financing your gilts anymore till I can actually understand the logic of what you're doing. Now, we little Richie there and Mr. Hunt, are they being dull about it? Yeah, dull. It's quite good sometimes. Don't mind dull. But again, you can see the level of their ignorance in terms of how you get capital into smaller growth companies. We have no shortage of those. We're really talented at it. And there is no shortage of money, but someone took the plumbing away. So to get the money from where it's being saved into the areas we need it. So go back to answer your question, what's happened to the FTSE? The FTSE was seen as dull. Now, what you want is, where are your unicorns coming through? Well, I think we mostly shot the unicorns now. But what you have is an index which is still a perfectly good set of companies, whether it's the banks, questionable issue over that, the oil companies. Now, in the world of ESG, environmental, sustainable, and governance, it's amazing how every single oil company says, no, we're an oil. We are merely a company which is actually transferring our power production to a green company. We're an environmentally led company. No, you're an oil company. But what's happened is BP and Shell have been left way behind the likes of Exxon. And so there'll be a catch up there, I suspect, coming through. But a lot of those businesses are relatively dull. That's why people weren't excited by it. But I put a lot of that down to the stock exchange, who are very bad at marketing their market. Don't expect people just to come here because we're a stock market. You stand haughtily in standing outside Bank Station expecting to do business. You have to go out and flog the market. And when you finish doing that, do it again.
So let's turn to Europe and to America and to China, perhaps in that order.
Sorry, just Coke, believe me.
You sure that's Coke or is that really red wine?
Just empty Coke.
Okay.
Yeah, sorry.
Europe, America, and the Far East, China.
Yeah, let's stick them all together. Well, look at Europe. Of course, the biggest issue there is actually what's happening in the east of Europe with that war, and we have no idea how that's going to end up. It doesn't look easy at the moment. It's going to be messy and bloody. My worry is that at what stage does Putin finally sort of flip and say, look, supplying planes to them, everything bar the pilots, as far as I'm concerned, is NATO actually getting itself involved in the business, and therefore that's the excuse he can use to start taking greater action against the Western allies. But here's an issue. Russia is not a superpower. Russia is a dangerous power. But it's nowhere near the same level. I mean, I bored you with this before, but the entire value of the Russian economy, measured by their GDP, and Russia is quite big, compared to Britain, which is not so big, our economy is worth just over, their economy is worth just over 50% of the UK's economy.
Wow.
And why? Well, because of the economy has been going nowhere for many years. Don't believe many of the figures coming out of it. So the opportunity was there. Putin originally said, we're going to broaden it up. We're not going to be involved in just gas and oil anymore. Basic production. We're going to have a developing, enthusiastic, much more tech-led. It hasn't. He's done it diametrically the opposite. So don't get frightened by Russia at investment levels, except you don't go near them. But for Europe, it's a political issue, and we have no idea what's going to happen there at the moment. But if you think the world's going to stop and we're all off to hell in a haycart, well, actually, you're not going to be investing anyway. So let's work on the assumption that we're not doomed immediately. Therefore, you still have to go back to the rigors of finding good investments. And there are good businesses there. And the one good thing I've liked over the past 2 years is you'll see, if you're following a few businesses, and I don't really actually like to focus on just companies because it's a very risky idea. You can't do it consistently either. But what you'll find there, though, actually more people getting involved that way because they want to understand more about what's happening. But the level of nervousness that the markets suffered from after Truss was really quite astonishing. That was reflected in the price of gilts. And remember, we're the only major economy which has never defaulted on its debt. France and Germany, used to have various times they've had to do it. Even with certain states in America have done it. And mind, it was Arkansas. No one's quite sure where that was anyway. But of course, no, we've never reneged on our debt. But we're in a position here. People say, okay, we haven't reneged. We like you, Britain, but still, we have to understand what your policy is, where your economy is growing, what it's going to look like, and then I'll give you more money. So if Truss had one thing that she really missed out on, it was effective, clear communication to give confidence to people. Merely showing that actually we're going to get a really exciting firework, going to lob this in, and the economy goes off. Well, I'm afraid most people just saw straight through that. Now, bear in mind, there was also an issue over pensions and with the Bank of England and not the restructuring, but some of the regulatory control, and that happened at the same time. So that added more fear to what was going on. So use these opportunities when there's fear to actually see it going, some of those prices going down, good quality businesses on a discount. They'll be there, and you don't have to do just stocks. You can do it with the ETFs, and you can do it with certain funds, but they're probably too expensive often. Anyway, sorry, shut at the moment.
Well, America and China, you're always pretty bearish about the South China Sea and the issues going on there. They seem to be more murmurings about Taiwan and things like that. The world's being a bit more dangerous. What's your take on that? I'm
afraid South China Sea is still there. It's not a stupid thing to say. I don't think anyone's drained it yet. No, but the problems relating to South China Sea, the Chinese are still expanding on the Paracel Islands, putting runways on and things like that. And remember, they managed to upset that. It was upsetting Vietnam, Brunei, Indonesia, Malaysia. That's quite clever to piss them all off at the same time, all in the Philippines. But of course, none of them could do much about it because China's huge and they're not. So Chinese gunboats can have a big effect, as of course the Chinese will tell you about the British with their gunboats, with their gunboats in the 19th century. So it's an old story. So what happens therefore with this? You actually find that the American economy is growing. It's going to be growing slower. Whether it technically goes into recession or not is almost slightly beside the point because the figures are very unreliable. What it means, though, is we're seeing a slow return to something that looks a bit like a cycle. And when you see an economic cycle, you can start applying some of the controls we used before, such as interest rates. So going back to that point with interest rates, the Bank of England wants to get interest rates up to about 3.5%, 4.5%, painful for those with those type of mortgages, because when the slowdown does come, I can cut rates. What you can't do is cut rates when they're at naught. Well, in theory, I suppose you could go negative. That would be extremely eccentric.
Two more questions about China. Max asked, how long do you think the recovery from COVID will take China to become back to where it was in the economy?
It's quite astonishing, and we can all criticize lockdown and how it's handled all sorts of different ways, but the Chinese one was totally illogical. And zero COVID outbreaks. Well, that's never going to happen. And it's taken a long time. And bear in mind, the reason they didn't backtrack on it is that lovely issue we always have with in the Far East, particularly with the Chinese community, face. Don't insult me. And so how do they backtrack? And they're having to find all sorts of reasons why they did, but thank heavens they have done. And already you're seeing the impact of that now as the economy starts moving again. And some of the supply chain issues that we were worried about last year, the year before, are easing. So the price of containers have come down really very dramatically indeed. And the shipping, the major ships going around cargoing all of these things, not necessarily full, but they're now able to do more business, and that's encouraging. When you start seeing those signs start to come through and pick up, that to me is a really very good indicator. We're not out of the woods yet, but at least I can see a path.
Two comments there. I see that China's been floating hot air balloons across America, and they've been shot down. And Carl says that the Philippines have just agreed to 4 US bases, with one very close to Taiwan. as well.
Yeah,
So,
yeah. I mean, the Americans are quite deliberately trying to make sure that, you see, they don't want to get left out of what's happening. Remember, Trump pulled out of all those areas because it's all going to be focused internally. So America finds itself behind the game, and we need America to be there. The large power, military power there, apart from China, is obviously Japan. And of course, China and Japan don't get on terribly well. Certain historical issues there, and the ability to use one rather vital word called sorry. So it's not just the South China Sea, but also the East China Sea, where you've got a bunch of rocks sticking up, no particular interest to anybody, except the Chinese saying it's oil and gas. And who owns these things? Well, of course, it's the Japanese and Chinese. And this really is a rubbing point. And that could be very unpleasant indeed. As for Taiwan, it's fascinating. I suspect they've watched what's happened with Putin and the ability to be able to go in and take over Taiwan easily. And what reaction would there be? Well, America would react. But American politicians have realized that overseas adventures cost you a lot of treasure. And therefore they will do anything they possibly can to avoid it. Thank heaven.
Now, when we're talking about investments, we need to keep our money safe. I think it's one of your favorite sayings that don't lose your capital because you're worrying about interest rates. But there seems to me that there's more Ponzi schemes every day, and that Bitcoin, which was supposed to be okay, looks like Mr. Bankman-Fried or Fraud, whatever his name was, since you were last on, was running a Ponzi scheme, even though the Financial Times said he wasn't for about 6 weeks.
Yeah, I mean, it's amazing how these things can gain credibility. For the past few years, when he was sort of attacking crypto, I think it's the right type of title as well, the sort of thing you would find in a crypt. In fact, it should be left there. But basic rules of investment: don't invest in something you don't understand. Now, that may seem a little odd, because in BAE systems, I'm not exactly going to understand how a tornado fighter works, but I don't need to know that. But what you do need to know is actually, in terms of investments and things, do people really understand how those businesses are operating and how they're going about it? And the trouble is, when returns seem to be, well, markets are frightening, returns don't seem to be very exciting. And so therefore they go for any other quick win. Now, the quick win, well, of course, like your book behind you, win and win. But the whole point is here, that's why we have race courses. You go there and you're going to have some fun, put some money on the horses. You probably lose the lot, but you haven't lost your wallet. No, but you've had some fun doing it. Do not apply that to your pension scheme. As you said, rule 1 of investing, don't lose the sodding stuff. Rule 2, refer to rule 1. And you keep it steady. And remember, and again, this really gets talked about, the strongest investment tool you've got is the power of compounding. And compounding over time allows you to actually see a real value created. And there's things on the BBC today going about pensions and trying whether people should be accessing the cash in their pensions. Well, that's a slightly side issue. The main issue is we should be actually having a pension scheme, saving tax-free scheme, from the age of 0. And be able to make sure that has the power of compounding 10, 20, 30, 40, really, as opposed to actually people probably putting it in when they're mid-20s or 30s. And it's not necessarily too late, but compounding is a longer-term game. So if you could start that earlier, or more to the point, could your grandparents start it for their grandchildren? And again, you come back to this issue of sort of the family office, but for the middle class, not for the super wealthy who look after themselves. So there's a lot of things that we can do to help ourselves. The software around has never been better and easier. Educate yourself on what's going on. If you don't understand it, too good to be true, it's too good to be true. And of course, those Ponzi schemes are there. As for crypto itself, it's an old well-trodden path. It's highly inefficient in terms of just usage of electrical power. The main thing about Bitcoin isn't Bitcoin. It's the actual blockchain structure behind it, whereby it's a bit like cobweb. Any part of that cobweb, if you touch it, the rest of the cobweb knows about it immediately. So I can see people who will be coming out with their version of cryptocurrencies, and they'll be the central banks. Because what they'll also have is actually making sure that their debt going up, they know exactly where it is. Is it in with the oligarchs? Is it actually being used for laundering? All those sorts of things. So it'll be a good mechanism to help the Bank of England actually control some of its debt.
So here's a question for you. Warren Buffett, Terry Smith, or a global tracker? Or perhaps even Chat GPT. Should we ask Chat GPT? It might give us the answer, mightn't it?
Probably, if it is. But I remember Terry Smith, when he used to use bank manager at Barclays Fleet Street. He was a bracy little bugger. He's done very well indeed. And to him, it's very clear. He picks a few stocks, he's done his research, and it's been successful over time. So yes, that's good. But always be wary of individuals. So we have a star investment manager. Sometimes the star gets clouded over, or just is a falling star. You only have to look at some of the issues we've seen with I've got to find his name now. The gentleman.
I was trying to remember it as well. 2
Yeah.
years ago.
Neil Woodford.
That's it. Well done. And I got stroppy solicitors letters from them on the basis that because I was saying that Neil and his old mucker, God, I've got his name too. It's sort of my dentist, and effectively they used to work together. They ran mirror portfolios. So when you look at the stocks that are in there for an income fund, it's quite interesting because a lot of them actually produce any income. That's right. Also, a fair portion weren't actually listed on anything, so were untradeable. But the bit that was really that got me was that actually between them, you can see how the trades went. They were actually in those mostly FTSE 250 companies. They were the market, so they end up controlling between them both around about 40%. So if you're going to be buying some more, what happens? They go up, but you're now in a position where you can't sell. Because the slightly whiff of panic that actually, oh God, Woodford's coming out of that stock, then whoosh, out it goes. And so you could look like the best thing ever for a few years. But unless you've got the discipline to actually make sure you have the mechanism to have proper liquidity, great measurement of risk, and the ability to be able to access more information. So it is, I find that really very frustrating indeed to try and make sure, and this is down to our industry, has learned to communicate. We're very bad at it. Mind you, as a failed barrister, we were even better at it, because if you started asking sensible questions, we would revert to Latin, and that made life considerably easier.
Well, we're nearly at the end of it. We're nearly at the end of the interview, Justin. Just one last question: are you buying fine wines, or are you buying Harley Davidson motorbikes as your next investment?
I did have a Harley one day. They're absolutely useless. The reason you see this trail of them going along the motorways together, not because they're being big and butch and go, that's as fast as it goes. They have got better machines. As a fine wine, well, in my rather less than impressive career, I did actually work on vineyards all around France and Germany, a bit in Italy. So fascinating to actually look at actually the production, all those sort of elements. But in terms of actually investing and things like that, is this so joke? Yes, is it liquid? Well, it is if you take the cork out. But the real point is here, people were looking around for solid assets, which were away from the market and therefore could provide me returns without the capital gains tax being involved. And so it attracted a lot of people in. The fact you've never heard of the sodding wine, and Sarson's vinegar should be laid down and avoided. But actually, I do admit I have built up a small portfolio of really, really high quality wines, which I would never drink because I'd burst into tears at the price that I would pay for it. But actually, that's done quite well. But it's only a small proportion of the portfolio, but it was just that little side leg over there, A, because I'm interested in it, and B, actually, it's made some money. And it has. It hasn't shot the lights up, but it's sold the bulbs there.
I was rather surprised to see a full-page advert in the FT on Saturday for whiskey investing. 13% guaranteed. How can they use that word? Return.
Oh dear! I remember those months we used to have, what was it, ostrich farms or ostrich funds. This came out 20, 30 years ago, and one of the FT journalists went down to actually go and see where these ostriches were, and it turned out actually there were some ostriches. But they had to keep on moving the same ostriches around from field to field to actually make it look as though they had 300 of them, whereas in fact I think they had 10. And that was a wonderful thing, because this is the great thing you want to invest in. It's going to be the new beef to be able to have. Yeah, but if there aren't bloody ostriches to back it up, oh dear me. Anyway.
That was an old trick played on bank managers. They used to move the stock around on a sort of conveyor belt. I think that was Rolls-Royce or something, Rolls-Royce or something like that. Justin Urquhart-Stewart, thanks for joining us yet again on Monday Night Live. Will you stay on and answer some questions, some more questions once I've stopped the recording?
Yes, of course. Be delighted to. And thank you, everybody.
Members of Monday Night Live to give Justin the usual round of applause in the normal way.
You're very kind. Thank you.
Thank you so much, Justin, for joining us. And where will interest rates and inflation be when you join us again in 3 months' time?
You want the answer now? Okay, yeah. Interest rates will go a little bit higher. and inflation would have come down, and I don't need to be a wonderful fortune teller for that. The February figures last year was when you saw one of the major rises in gas and oil, well, obviously gas, and that was a seriously inflationary element. This month, it drops off. I don't mean in terms of Prince Harry's bottom things dropping off, but actually in terms of the inflation calculation for 12 months, the bad one drops off, and so inflation, the measure of it, will start coming down. However, you're still going to find commodities being relatively high, soft commodities. Ukraine will continue to have an impact. But in terms of power, actually a lot of the governments have already found alternative supplies and sources. But it will take very little to blow this off course. One of the issues could be if China comes back more strongly, they have to do a lot of work to do that, that in turn will pull in a lot more oil. So be careful there. That's when you could see more of that price rise coming through. But later in the year, I think you will be seeing, not a growth immediately. It's going pretty low stats. You have to be careful. Is it, just merely sort of a little bit of grass, or is it just actually just some advanced mold? So I think you will be seeing slightly more encouraging figures coming through, not just here, but also in America as well. So I'll stay with it.
Thank you, Justin. Talk to you soon.
Look forward to it.